What's going on, boys? So we're going to be going over some of the charts that we have seen lately that have been very, very nice. A lot of that basket being the bottom discretionary, and a couple things that I do want to mention about this trade is that the whole entire basket itself looked really clean. So whenever you take a look at bottom discretionary, first of all, we'll go over and do the sectors watch list, and we'll just take a look at the discretionary sector itself, right? So this is the XLY sector fund. As you could see, what happened down here at these lows was this was Monday, August 5th. We had a lot of volume. This was on the day that everything gapped down, the whole entire market gapped down, and we had this really bad blood within the market. And I noticed how this sector was catching a lot of volume. If you take a look at this volume, first of all, it's swiping out this double bottom support range right over here, right? So this is a double bottom support range that it started to take out. And then whenever you look at where um, this was all kind of put in place at, we had a really nice heavy volume candle that traded 8.196, so pretty much 8.2 million volume on this given day. And this has been the highest volume that we've seen across the market since all the way back over here, which was February of 2020. February 2nd of 2024, right? So it's a very notable range to obviously hold on some sort of pullback, right? And then obviously, with that being said, I'd be looking at industries now because we have this whole entire sector, yet there's kind of industry by industry. There's some retail, there's more of like the consumer side of things when you look at consumer discretionary. Obviously, Tesla's the biggest holding within this one, which I did also trade this week. This isn't all a thesis based off of what XLY was doing and what the discretionary sector as a whole was doing and what the sector fund was doing. It was more and less just the ranges that were very tradable and really nice risk to reward that displayed in Starbucks, Nike, McDonald's. I didn't take Starbucks this week, but I took it on a day right over here whenever we caught this news and then this push back into this liquid support with like 7 days or probably more than that, probably like 10 plus days of consolidation up here off the 79 range. We caught this whole entire candle. We were actually long the day before, I think. So that was a really nice trade within the midst of July. And then as you guys could see how we got this really nice volume spike. And then what happened afterwards was we got our earnings. It gapped us up actually, which is actually very notable. And then obviously after that, we got this like seller looking candle that rejected the resistance one more time. It swept this candle high and then obviously started to fail. We started to get some buy wicks here, however, and then we kind of just consolidated off of this range. And then we got this massive markup on August 13th. So whenever I saw this, I was like, this is bottom discretionary. I've been talking about bottom discretionary. Let's go see if there's any other bottom discretionary. And then I started to notice how McDonald's was a really clean look. So whenever you head over to McDonald's, super clean look here. Why, guys? Well, first of all, let's go to the weekly and let's just take a look at what looks to be some sort of higher low by higher low by higher low trend, right? So whenever you're looking at this, you could draw yourself some little trend line that looks something like this. And what happens here is there's a little short-term break within like higher low trend lines, and this is why I don't hold a lot of significance to trend lines, is because the accumulation did start to happen off of the trend line on the week of May 28th, right? So whenever you're looking at this and you have a swing low, right? And then the accumulation starts to happen ever so slightly above that swing low with this hammer looking candle. Hammer looking candles are always bullish, especially on weekly charts, right? And then obviously, as you kind of mark your way up, you start to stall off because obviously some sort of V-shaped recovery and an accumulation is a very premature type of campaign, right? I always like to talk about premature campaigns, typically campaigns that are looking like sell side trend. They don't happen like this and then just go up and continue like that like so prematurely. What they more and less do is find these lower lows that are being bought. They're incrementally buying, right? Maybe they get a steeper lower low and then those lower lows start to diminish. Maybe you get more violent pops to the upside on heavier volume, and then maybe you start building out a base, right? That's a change of character within the chart, and then maybe you get one little shakeout, one little sweep of everything, a pull up, higher low, and then now you get your change of character for the trend higher, right? This is much better looking than this, especially if the volume price analysis all aligns, right? This is a lot better looking, guys, than just this, okay? Right? It offers better risk to reward. There's a lot more of a cooked premium within here. You get a lot of weeded out traders, and then that's whenever the smart money obviously starts to mark things higher, right? Um, so we got this one lower low and then a double bottom look. The double bottom look gapped us up 2.2%, and we traded 8.4 million volume. As you guys can see, the volume is very, very high relevant to the rest of the relative to the rest of what the chart would look like, right? Our heaviest volume before this was February 5th, which was a very long time ago, right? So we also had a really nice heavy volume candle over here on this earnings, right? That actually marked us down, then back up, and then we obviously just couldn't get back over this little range of resistance that was created at 276. Therefore, we're moving back down, and then we start accumulation at a new lower low beneath this low right here, right? And that's why there was a resistance established off that. So this range down here is below this whole weekly trend, right? And it's starting to find buyers at these new lower lows. It's starting to find a buyer that's creeping into this swing low. And then we swipe the swing low. Volume really died out on the effort to swipe the swing low, right? So just think of this, guys, whenever you have sellers trying to push the name down and then you print a hammer candle that closes ever so slightly above the swing low, this is no fuel from sellers. This is fuel from buyers, right? Um, that's kind of what we can expect here, given the fact that the rest of the volume patterns within the chart are relatively bullish looking, right? So this might have been OPEX volume since it was a Friday. I can't really remember, but this is very notable over here, right? So gap ups typically do show an accumulation, right? Volume actually started to ramp over here at this little low. So there was something brewing over here, right? So whenever we started to mark up, it was on increased volume followed by diverging sell side volume, as you could see, lower volume. And what this was kind of doing was it was kind of just fighting for a move all the way back up into a triple top potential. That's exactly what we got. We started to then simmer out on volume, and this is where I started to notice everything because, first of all, the markdown in the market happened. If you go over to, let's just use QQQ or SPY, that happened on August 5th, right? So whenever you go to McDonald's, August 5th for McDonald's is actually everything cooling down within a resistance, right? So I'll get to that in a second, but you get a markdown followed by the equity marking itself back up. Another really bullish volume stick right over here. This is all heavier volume and the heaviest volume ever since this OPEX volume, I believe. And then before that was this really nice gap up, right? Where we put in a double bottom, right? So obviously something's really happening over here. And then what's the really telling sign here, guys, would be these two little candle prints, right, where the volume's drying up into the earnings, and then obviously they swipe out that previous day low, and then there's a massive expansion right off of this level. We caught the IV flush for like 1600% on this move, and then it pushes us right back up into resistance. Really heavy volume, really strong closing daily candle, right? Sometimes what I like to do here, guys, would be take the highest daily successful close from a seller and use that as your gauge for kind of like where the seller is obviously trying to protect territory at. And this would be the highest uh, daily candle closure, right? Within like relative to what's local, right? I always like to talk about shit that's more relatively local. And if you want to, you could technically take it from over here. It doesn't really matter. All that really matters, guys, is that the next following day's print claims right over the print of the previous closing day. As you guys can see right here on the 15, if you go take a look at the hourly, it's going to look a lot nicer. But this was a really nice simple break, a simple retest purchase time on this. and then obviously take the trade for continuation all the way back up into 276, 276, 275 were two really nice ranges for a target. And then what your risk would be and what my risk was. I was long over here. I bought time, I sold time, or I sold the position with time, and then I bought more time and rolled profits on this resistance, sold again, and then repurchased again. So I'm talking about the initial trade, trailing here, trailing at the low of day, whatever it is, guys. Keep your trailing at the breakout, right? Or well beneath the breakout just for safety, right? They could do a stop hunt, and it is what it is. And if you could start to notice that, that's whenever you could start to say, hey, I'm going to include this more into my plan now. But even this was a really beautiful swing, and probably yeah, that's like a 7 hour trade, and it was almost stress free, right? So let's talk about volume now and what was printed on the earnings day. If you go take a look at the daily volume, guys, this daily volume is all the way up here. The last volume we've had at these levels was all the way back in the COVID ranges. That is so notable, right? You always want to look at volume that makes a lot of sense. You always want to look at volume that really is really heavy relative to the name itself, right? Because obviously you can't look at it from a number perspective, right? 9 million volume isn't something that's like very big in a tech name, right? But this is McDonald's, guys. It doesn't always get a lot of attention. And this is how we read that this name's getting a ton of attention right now. So that's the trade. Um, if you guys want to see something that what I was looking at, this is kind of a little sample of what I was looking at. Um, McDonald's Friday, 2.95%, nearly double the 100-day average true range, and 9.586 million volume, highest volume since March 2020, COVID bottom. The definition of following big money, A plus setup and looking to roll profits, and a pullback from previous positions, right? So this was August 3rd. If you go take a look at August 3rd is the pullback out of the resistance. That's whenever I said, you know what, I'm going to really focus on this chart. I'm going to try and get another trade out of it, and let's just see where this thing kind of moves from. So one principle of Wyckoff, whenever I'm looking to roll profits, whenever I'm looking at a daily flag starting to try to build out, I'm looking at reclaims of what would be like old supports, right? So you have a support established here, and this is the preliminary range, right? Every time I talk about, preliminary type of distribution, and we go take a look at something like AMD, this is the preliminary distribution level right over here, right? This is where it all started. The volume anomaly started to enter into the chart, and then we obviously had the breakout followed by the breakout failure, and then they start to fail that level. They started to fail it again, right? So the initial breakout range that is distributed and then pulled back beneath, and then obviously a lower high on top of the failed breakout, which would now be a failed breakout. Same thing with the concept of a failed breakdown, right? This is a failed breakdown. They reclaim the support and then they buy right off of the support, right? So you could start to see how we printed really nice hefty volume, and actually this was the heaviest volume since COVID, right, which was Friday, August 2nd. Really healthy spread, 3% move on the underlying or $8 move, right? And this is all pulling back into what would be old support from right over here, turning into now potentially new support once again, right? And it's just a simple pullback. It's a very constructive flag. If you want to go take a look at the hourly, what my thesis was for the time being on the hourly would be a reclaim of this previous. Now I just kind of go into the smaller time frames, right? It would just be a simple reclaim of an hourly support range or this gap range. You can take it from really however you want it. It doesn't have to be necessarily perfect, but yeah, that's just a really nice example of how to execute from higher time frames into smaller time frames, using the higher time frames as your potential signal to start looking for, and then using the smaller time frames to then um, obviously look for a very precise execution if you want to trade a more aggressive expiration. Um, this is also another one of my things. So if you guys take a look right over here, this is me DMing my buddy Lucas, this is my MCD entry. Okay, so what this was whenever this was reclaiming the previous hourly level, right? Whenever you go to the hourly, you take a look at this little support that was then reclaimed and bid. We have a swing low, we have a swing high. This is all internal structure building for a bull flag breakout. I'm just taking the swing low and the swing high, and I'm looking at the golden pocket. Go into the 15, you'll be able to see this. Swing low, swing high, pull back, golden pocket. Pull back and hold of the previous support, right, on smaller time frames. You could kind of pull it from all the way through here, which is also the gap, right? So very nice, really nice confluence to start adding into here, waiting for the higher lows to build out. What do we get? Higher low, higher low, higher low. Third higher low leads to the breakout. Target the resistance, put the trailing above the resistance. Whenever you get above it, should look something that looks like this. And that's why I said on Twitter a million times, guys, don't lose sight of the damn chart. I tried to warn people time and time again. Don't really know if you guys listened. However, as you guys can see, right over here, I try to remind people time and time and time and time and time again, not straying away from this chart. That's whenever we printed that low within the flag channel. Don't lose sight of the chart, right? So I was keeping my eye on this chart like a hawk. This was August 12th, right? You go over to August 12th and you still have opportunity to trade this, right? August 12th is right over here. You still have opportunity to trade it on the 13th, the 14th, right? And so on and so forth. So that was a really nice trade just because I think the volume that was showing within the trade was something that should never ever be slept on. I gave the trade in the Discord too. I just don't have the Discord. I just lost my Discord tab on a monitor that's off. But yeah, that's a really nice trade. So that's kind of just how I was breaking down that one. Let's go head over into Nike. So I want to break down Nike for a few reasons. One, because I read the name like an absolute book. Okay, so this was a name that I read like a mofo, and we're going to start with what I saw right off the start. Let's first of all just head straight into the weekly. What do we have at the weekly? Same general thing, except price isn't at COVID lows. Price is at COVID lows. It's not just trading volume off of COVID lows. It is literally at COVID lows. Not COVID lows, but like within the COVID dip, right? COVID lows is all the way down here at 60 bucks. Not there, but it's within that range, right? And that's a very liquid range, first of all. I'm not going to get too much on the conspiracy level of where accumulations happen from, but stocks, large caps, they always move to very liquid spots just for purposes of filling leftover orders that are in very volatile areas where, you don't necessarily have all of the sustainable amount of demands or supply at a given resistance or support to continue a trend, right? So you have to move lower, right, to a different demand. This is a massive bull gap from COVID. Okay, so take it from here to here. That's your bull gap. Where do we mark down to within the confines of after earnings? Right into the bull gap. What do you think I saw on June 27th, guys? June 27th. Okay, well, I said that after the report, as you guys can see. After the report, 4:34 p.m., June 27th, I knew this thing was marking down into that range. A spring is on the way, boys, June 27th. And then, we go back and then we see Nike's building accumulation August 2nd, right? So I knew this thing was building accumulation. I just had to give it a little bit of time. We talked about premature campaigns. Whenever you see a massive gap down like this, you don't necessarily just want to be trading that like, oh, massive gap down, V-shaped recovery. No, that's premature. You're getting no risk to reward. You're getting no optimal entries. You're not waiting for campaigns to build out. You're not respecting the simple basic laws of Wyckoff, right? So we print a little bit of effort from buyers the next following day, and then obviously we subsequently bleed a little bit lower. What happens? What do I talk about sell climaxes with, guys? I talk about sell climaxes that lead out into really nice explosive accumulations. What do I mean by that? Well, I mean a low that's being placed and then a new lower low, it's being bought, a lower high, a lower low, it's being bought, a lower high, a lower low, it's being bought. That lower low is bought more than all the other lower lows, but the other lower lows are eliminating supply, especially with lower highs, meaning an ask needs to move down. Buyers move up a little bit, asks have already moved down 3 times. Now asks move up. The asks that move up get absorbed, and boom, that's your explosive campaign, right? What happens here, guys? Let's talk about simple price covered over time. Let's talk about the sell climax. These are all lower lows that sellers can't get it beneath any further. Lower low, lower low, lower low, and lower low, right? And then look at the progression on these lower lows. 71.67, 71.24, 70.90, and then 70.75. You guys want to take a look at what the progression was on this time horizon here from sellers? They pressed this thing down 1.28% in 18 trading days. Do you think they're feeling good? That'd be like you. That'd be like that would be like me punching you in the face a million times and you eating it directly on the chin, and you felt just as good as what you felt leading into the fight at the stare down. So I'm just haymakering you, and you're sitting there and eating all of them, and my punch just can't do anything. Like seller's punch just can't do anything, right? And what's the basic laws behind the level 2 order book, behind how order flow operates? What's the basic laws behind it? An ask moved down, they sold for less from here than they did over here, right? So they're getting quote unquote aggressive, right? Because they're willing to sell for less, right? They're panicking. They try to sell here. They sold here, they sold here, and then they tried one more time to sell here. And what happened at the lower lows? The buyers played passively at each and every single new lower low. And then how do you think I knew news was coming? I want you guys to pause the video and try and describe as to why you think I knew news was coming. So August 2nd, like I said, I showed you guys a tweet where we built the reaccumulation. August 2nd was right over here. Okay, so I thought potentially there could be a higher low. I did buy calls here, except I de-risked those calls and then I sold that given day. And then I said, you know what? I'm going to roll profits if we get right above. And I think I might have had some runners that got smoked, but it didn't matter at all because it was just risk-free runners. I think I might have traded Nike on August 2nd. I don't think I did actually, because I was going to give it time to find the expansion, the break, the retest, and the go. But a lower low would have been even more perfect. So why do you guys think I knew there was news coming? Here is the proof, by the way. Nothing's edited. This is purely, how I felt about the name at the given time. August 10th, 1:19 p.m. Go to August 10th. Okay, so it was over the weekend. So news hit 3 trading days later with Bill Ackman accumulating a stake. Okay, guys. Well, what I knew was the equity is extremely marked down. Sellers can't push it down anymore. There's clearly a buyer that's kind of entering in and accumulating the sells, right? As you guys can see, the volume gets really dry on certain given days, except on some of these other given days, it starts to really ramp at the lows and then it never gives up at the lows, right? So there's clearly something kind of happening here. And there was just absolutely no volume, no candle spread, nothing that was from sellers that looked necessarily so good. This was the only one that was a little bit creepy looking. And then we get this really dud type of daily candle spread the day after, followed by relief on really low volumes. So given the fact that this is a shaved bottom, very bearish looking candle at a new low, doesn't really matter because the effort is heavy here and the result was actually a pullback, right? Does that make sense to you guys? So whenever there's a heavier auction being established within this seller candle, and it actually creates a new daily low and close from sellers, and then it does nothing with it. What does that tell you about this candle? That there could definitely be some masked buying within the tape, right? Something that we all can't necessarily see. Okay. So what happens afterwards is we create one more itty bitty low, and then we print this weird inverted hammer looking thing. Volume increased. Then we start to ramp a little bit higher and try to put in a 4 lower low accumulation. So I showed you guys the news. I showed you guys all of that. Um, let's get a little bit over into the other things that I told you guys about. Alrighty, so this was my first initial positioning. Right over here, money is where my mouth is now. Got to get over the Monday wick. Pretty sure this has been a 4 lower low accumulation into the 2020 gap, right? And that was on August 6th at 9:52. August 6th is right over here. Okay, so what happened is what I like to do, guys, and I don't know if you guys have ever seen me do this, but whenever we have an established range, I want to take the halfway point of this established range. If it's coiled, whatever it is, I want to take the halfway point. And the whole entire market sold off on this day. Okay, so I didn't really hold a lot of relevance to it, but all this was doing was coming in hot off of reclaiming the range after a 4 lower low accumulation, and I figured on a 4 lower low accumulation, that's whenever the campaign is relatively strong, and that's whenever we could start looking for potentially higher lows now, right? So there's our higher low, and then there's our expansion, right? Now what you do is if you don't find any strong seller effort that pushes this for a fifth lower low, which is very unlikely at this point, especially with a lot of the other discretionary, catching some news, catching some buyers loading up the name. That's whenever you would start looking at the swing low to the current given swing high at the current time. Hold equilibrium, hold the range, hold the 618, hold the previous consolidations, look for the higher lows and then the expansion. This has a lot to deal with buying time, right? So if you didn't buy time here and then this stopped you out, don't get rid of the setup. See, a lot of people would look at this daily print and be like, oh, that setup's trash. It didn't print no volume. Volume is dying into a fourth test of the resistance. What does that mean? That means that these three previous tests use a lot of ammunition. This did, this did, this did. So whenever you push into a fourth test, the volume is really diminishing here, guys. What do you think happens? News or a breakout or something, right? It doesn't always have to be news, but a volume increase has to happen, or this thing is going to be an absolute dud. That's why the risk to reward is so damn good on charts that look like this, because the volume dries so hard from a sell climax with 4 lower lows. Actually, technically 5 lower lows, right? Because this was an attempt of a bought lower low, but I'll count it as 4 for now because this was a really lacking progression from sellers, right? Whenever volume is really dying up back up into this range, right? There's almost like there's nothing. It's silent as fuck. Something has already been priced in, something has already been accumulated, and now we're just waiting on a catalyst to start getting things rolling again, right? Juice up that position that someone's buying, and then news steps in at a certain given spot, right? So I've seen this time and time again. It's not something that you guys can just predict news on a ticker all the time. I don't want people to think that way. Um, so yeah, um, yeah, I definitely don't want people to think that way. That's kind of just how I found the chart to be. Um, so yeah, I don't know. We'll see what this has left in the tank. But okay, back on track. We break out of the resistance. It really never gave an opportunity. You were able to enter up here after the 15-minute orb was established, maybe risking the opening print. I'm so tired, man. With like a stop beneath here, maybe a stop on the overnight gap with a target far above the earnings candle. You could turn it into a 3R trade on quite the shitty fill if you're very confident within that. But my suggestion would be kind of understanding what's happening on the wider perspective and starting to enter in on higher lows that are established on the hourly over here. And that's what I did with my time. Um, I obviously bought some other positions a little bit more aggressively with less time, but I cut those immediately on this day, and then I was able to hold the time all the way up into here for like 650%. So yeah, that was the trade, really clean trade there. Now I'm gonna get over into the Disney chart, and then I'll wrap things up. I think I had some other trades. I have a trade open, but these are my three main trades for this week. I had Tesla as well, but it was just a really nice intraday trade for like 130%. So I'm not gonna go over that one too much. Basically, all it really was, guys, was accumulation, shakeout, reaccumulation, higher low accumulation, push higher, swing high, trap bulls. Sentiment is lopsided, bullish sentiment. Push lower, start reaccumulation simply on the sell side trend kind of weakening it with this volume, and then a slight volume increase on this buy candle in the reaccumulation zone, followed by one, two, three, four, five inside bars right above this level, right above this swing low, right above this closure right over here, right kind of at the breakout level itself, right? So this was a name that was really on my focus for quite some time, and it played out really well. I took it right above this 207.83 level. Caught some retests on this wick, was risking down into here, a loss of this, and this was a really nice trade, guys. This was like really nice. Not even on weeklies either. If you take a look at this real quick, long side position, risking this level, targeting up into here. It's like a 5-6R trade. Really nice. Let's go over into Disney. So I did tweet about this one too. It's funny how I tweet about everything before it all happens. Rare. August 11th, 2024. It's funny because I had Nike and Mickey D's on the focus list as well here. Um, August 11th, 2024. I did also break even on an AMD trade that I should have made a several 100% on this week too, but it's all good. August 11th is right over here. So going into the Monday. Alrighty. Jeez, man. This chart did low key look like ass. Okay. Anyway, I got the confirmation on this candle, right? It gapped back up above the opening print of the top of the gap, the Q4 2023 earnings report. Yes, that's where we are, guys. Man, almost a year ago. This whole gap that was left untested, this whole previous range of reaccumulation, this previous swing low. I'm looking for a simple fucking higher low, dude. It's really not that hard. Right off the gap fill, too. What do we get? A hammer print right off that range. What happens? Volume dries up. Man, if sellers don't press it down on this drying up volume, what's going to happen? We're probably going to mark higher. What are we going to mark higher to, guys? The hidden gap. We're at least into the range, right? So what happened was on the 5, we pushed up here today. We pulled back. We started this day on really nice heavy volume, man. I must have to say. We had a lot of flow entering Disney. We pushed up. We had an aggressive, nice little pre-market session, and then we pushed up on really nice heavy volume. There wasn't a lot of resistance here, hitting on this with no volume really pouring in, and then we get this monstrous fucking volume, dude. Okay, so what do you think happens here, boys? I'm taking executions on this break, and I'm buying a little bit of time, and I'm looking at once again hourly higher lows to kind of start building out. We did get a tiny gap up followed by a sell. Should that really shake you out of the trade? No, it shouldn't, right? If you go into the 15-minute chart, it's kind of just holding the consolidation from the afternoon the previous day. And then we just get this really nice absolute ripper. And target was off by 30 cents, right? You should be realizing profits anyways, 30 cents away from a target, especially whenever you're de-risking trades leading back into these really sketchy ranges of resistance where this whole really heavy volume kind of sell happened from on the indexes. So those are my three focal points for the week. Well, four, I should say. Tesla, Nike, Disney, McDonald's. Um, there really wasn't anything else that was super, super clean and easy to read. I would say Kava was a really nice chart, but I did lose a little bit of focus on that. I would say AMD was also a really nice chart. I took some longs on AMD to start off the week on Monday, and then unfortunately this little knife over here within tech shook me out, and it was really annoying. It is what it is, but yeah, that's actually what shook me out of a lot of my longs that I had from the previous week before the start of this week, which was I was balls deep in Nvidia and QQQ. So I bought some longs right over here, and then I caught like 136 into 138. Um, and then this knife took me right back to break even, and I sold. I actually lost a little bit of money on this trade, but it wasn't like anything that I cared about. Um, Very sloppy trend here though, so I'm not necessarily so mad. I mean, these little days over here, obviously holding into this would be a very beautiful range to start thinking about taking profits off of, but yeah, this was a lot of traps within this price action this week. So that's about it, boys. Um, One other missed opportunity that I did have as a plan would have been SMCI, simply with a higher low right off of this gap. Unfortunately, this was leading, I believe, into CPI or just simple data. But yeah, this is the gap that's just being simply pushed right back into notable volume where it pushed right off of. Look at that 5 minute, look at the 15, look at even the hourly. Look at that hourly candle right there with that wick. The 15 is actually really clean. Look at that volume. But yeah, this was like a really nice strong claim back into the gap with what looked to be a gap down followed by accumulation to start it off, and then it gapped it down again. Right, so yeah, I don't know. Funny enough, this is all coming off of a previous gap anyway. But yeah, that was the opportunity I missed out on Thursday, but I did have better positions, so I don't really care. Um, and yeah, that was the weekly trade review.